I'm here with Matt Simmons, the chairman of Simmons and Company, energy investment bank in Houston, and also the author of Twilight in the Desert, a highly influential book on the oil market. And he's one of the world's foremost experts on oil markets. And we'd like to talk about a couple of topics in the news. The first is yesterday OPEC announced a 2.2 million barrel a day cut in production and encouraged Russia to join them in cutting production. And they say they're reacting to falling demand. And we'd like to get your take on, what the supply and demand situation is in the world, and is demand really crashing the way we're seeing?
Well, that's the $64 trillion question. And the reality is that we don't have precise data, but there is no way that demand is falling to the extent that the pundits seem to think it's falling. But it is absolutely clear as a bell that price has collapsed. And that's what they're panicked about, because their economies do not work at the current prices.
And what do you think this cut in production is? What kind of effect is that going to have on the price of oil?
Well, first of all, I think my hunch is that the impact of $40 oil is so awful to their economies, or $45 or $50, that they will actually make a cut. Now, if the markets actually don't have a big amount of glut in them, they could be cutting into a balanced market, which could be awful 6 to 9 weeks from now. And in the meantime, what's kind of disturbing is that the oil and gas industry is unwinding supply, because they too can't operate in today's prices. Today's prices are less sustainable than 10 years ago when we had $10 oil.
Mm-hmm.
It's sort of interesting just to see how radically the cost structure is. So we don't have any data of any reliability that shows that oil demand has actually plummeted. It's probably a little bit weaker than it was. In the United States, it's sort of still hanging in the last 4 weeks' data of within 5% of the all-time record, which was unsustainable.
Mm-hmm.
Our oil inventories, as best we can measure them in the United States, are on a day's usage basis towards the low end of the last 5 years and the really low end of the last 10 years.
Mm-hmm.
So we don't have any evidence there's a glut, other than the perception there's a glut, because the price came down faster and sharper than any time in the history of the industry.